Welcome back to the Command Your Brand Show. I am your host, Jeremy Ryan Slate, the CEO and co-founder of Command Your Brand. You can check us out over at commandyourbrand.com. And guys, I'm very excited for the conversation we're going to have today. I have known this guy for years, and somehow we have not done a podcast yet. So this has been a long time coming. Welcome to the show, Tyler McBroom.
Hey, good to be here, and super excited to dig into it today. It's definitely overdue.
Dude, like how have we known each other this long and not done this? I guess it's been 4 or 5 years. So I'm glad we're finally doing this.
I know. Hey, it's overdue, but we're here, so it's good.
So for people that may not know who you are and what you do, man, tell us a little bit about who you are and what you do.
Yeah, so I basically help business owners all over the USA pay less tax, and I do that by making taxes a little sexier than most people think they are. So I own a CPA firm, tax advisory firm called TRM CPA. Been running that for about 5 years. Used to be partners with my dad this is actually my 10th year being a business owner. Helped him take his business from 4 people to 46 people. Decided to go do my own thing. Started over from scratch. Kept my partnership with Tony Robbins that I had built during that window, and my Instagram page. Started over and rebuilt, and now we're doing more revenue than I was in that partnership with half the people. So learned a lot of lessons in terms of running a business through that time. And like I mentioned, have a partnership with Tony Robbins, or my firm is one of 2 in the United States that's part of his Global Accounting Advisors Alliance. So I get to teach about taxes on his stage, and love just kind of helping demystify the whole 70,000 plus page tax code for the business owners all around who get to actually do something about their tax bill.
Let's start there. I guess, why are taxes so confusing to business owners? I feel like it's one of those things that if you don't know what you're doing, you can either throw away too much money or put yourself in a legal problem. So I guess for a lot of people, why is it such a bear to even get into that?
Yeah, well, I think it's because, number one, it's not taught in schools, right? There's a famous meme that floats around this time every year that it's I'm so glad I learned about parallelograms in school, because it really comes in handy during parallelogram season every year. And so we learn about parallelograms, but not about taxes. And business owners, there's really 2 tax codes in the United States. There's one for employees, and then there's one for business owners. And we kind of grow up knowing about the employee side of things, right? Which is pretty much, you can buy a home and write off the interest. You can give away money to charity. If you have medical expenses, you can write some of those off. And that's about it. But when you become a business owner, I kind of hinted at there's 70,000 pages in all of the tax code. Most of those are for the business owner. And so there's so much, when people start business, they're focused on getting where their next payroll is going to come from in terms of revenue. They're focused on sales, account growth, and all of that. They're not focused on the tax side of things, but there's so many things that they can do. And so I'm just trying to be, out here, make them aware of it. First off, actually awareness is key. And then from there, it's actually getting into the weeds of how you actually make that happen in terms of tax strategy and all that.
So you've helped many, many business owners. I'm curious, where do people throw most of their money away? And when we look at handling our taxes, where should we really start?
Yeah. I think that, as a high level concept, it's really, first off, finding an accountant who does tax planning. So there's a lot of tax accountants out there that are great at filling out the forms and meeting at tax time and making sure your return's correct. But as I said, as a business owner, there's so much you can do to actually make that number that you pay go lower. But business owners don't have any clue that they should be meeting with a tax advisor before the end of the year to actually get a list of marching orders, go XYZ, do these items before the end of the year to actually take your tax bill from 20,000 to 10,000 or from 100,000 to 50,000. So getting the knowledge of getting that meeting scheduled would be the first thing that not nearly enough business owners do. And then in terms of one quick thing that is just super simple to optimize, that is going to help you both in your tax bill and legal protection, which I'm not an attorney, so consult your attorney on this part, but getting the right entity type in place. So there's a lot of kind of internet social media, TikTok tax type stuff that just says go open an LLC and you can write stuff off. And that's not exactly true. You can write stuff off if you're a real business, but there's a lot of actual real businesses out there that are operating as a sole proprietorship or a single member LLC when they should be an S corporation or a C corporation, which isn't as often. But the difference between being a sole proprietorship versus an S corporation, if you're making $100,000 a year, can literally be $15,000 in total tax just from that one shift. And so that makes a big difference when you're really building your business up to have that in place from the very beginning, rather than letting the first 5 to 10 years of being in business go by and you're just throwing away an extra $15,000 to $20,000 a year unnecessarily.
I really want to hit on that tax planning portion because I feel like that's really important. I know our first few years in business, we used a local person to help us with our taxes. Great guy, really like him. But it would basically be like, all right, here's your tax bill. What are you going to do about it? Mm-hmm. And that is not the situation to be in, because even if we look at our last year, we got to December and our accountant's like, so I've been watching this, watching that. You really should look at getting a 179 deduction and some other things. So we ended up purchasing a vehicle in December to kind of lower our tax burden and things like that. But these are things that once the tax year is over, you can't really do much about it. You need to be looking at it and planning throughout your year for it.
Correct. Yeah. Yeah, exactly. So I always say, once the clock strikes midnight on New Year's Eve and the ball drops in Times Square and Ryan Seacrest wishes everyone a happy new year, your tax bill kind of is what it is at that point. And so if you are going to buy a new vehicle or whatever you're going to do to save on taxes and get those deductions, it needs to be done before the end of your tax year, which for most people is the calendar year. And in terms of tax planning, yes, going and taking advantage of Section 179 is something which is the tax code for people who aren't aware. It's the section in the code that if you buy an SUV or a truck that's over 6,000 pounds and use it for more than half for business, then you get to write off 100% of the purchase price in the year you buy it. So it's a great thing to do. It's also abused by business owners who are just going out and buying stuff just for the write-off. And so I always tell people that is doing it timing-wise, where you're buying it on December 20th instead of on January 10th is going to get you the deduction now. But don't go buy a G-Wagon just for the write-off. Otherwise, you're spending $100,000 to save $30,000. So you buy it if you need a new car anyways, and make sure you optimize the timing and writing off the right way. But just going out and buying more stuff to save taxes is sort of like going to the mall and you walk into the department store and the sale's 30% off. You say, I can't afford to I can't afford not to buy all those clothes. Let me go buy them. You're still spending 70 cents on the dollar out of pocket. And so that's one of the most common, a write-off does not mean free money. Mm-hmm. That's a big misunderstanding out there in the write-off world. And I think from non-business owners too, they think us business owners just get all this free stuff. It's not just free
Wouldn't
money.
That be nice?
Yeah, it would be amazing. I mean, it would certainly make me go invest in a lot more expenses, right? But a write-off doesn't mean free money. It's the amount of the write-off times your tax savings or times your tax rate. Sorry.
Yeah.
And so that's something that you want to always talk about before big purchases with your tax advisor. But there's other things you can do, things like getting the kids on the payroll, renting your house out tax-free to your business, a lot of other different things that actually create more deductions for yourself that don't require you cutting a check to someone else. It's more cutting a check to yourself or your family members.
So what are the most common misconceptions people have? I know you mentioned the LLC thing in the beginning that, hey, people think that's the right move because they gotten bad advice on TikTok or whatever it might be. But what are the most common misconceptions that you see with people around their taxes?
Yeah, I think number one of them is definitely the LLC fairy. There is no LLC fairy that magically, because you go down to the State Department and open an LLC, that you just get to write off whatever you want. It has to be a real business that you're operating, and you can only write off expenses that are related to you trying to earn the business. So it's got to be ordinary and necessary expenses within the business. The other one is kind of what I just said. A write-off doesn't mean it's free money. A write-off means it's the savings based on your tax rate. And then another one that comes up a lot is, and I just saw a conversation on some post I saw today when I opened up social media, is that when you get into the top tax bracket, that suddenly it means all of your income is going to be taxed at a higher rate, and so you should stop working. So
that's a fun one.
Yeah. So it's this whole like concept of, you think that, I'm going to make more money, so then suddenly all my taxes are going to go up, and it's called a marginal tax rate system. And so what that means is if you go into a new tax bracket, means every additional dollar you earn is at that new tax bracket. But it doesn't mean that all the dollars you earn before that are suddenly taxed at a higher rate. So let's say the tax bracket's at $150,000 goes from 15% to 28%. And when you make $150,001. Mm-hmm. Well, all that means is that $150,000 first dollar is now taxed at 28%, and every dollar above that is taxed at 28%. It doesn't mean that the first 150 is taxed at 28%. It's taxed at those lower amounts. So
that's a really, really good point, because I don't think a lot of people understand that. They think that basically it retroactively handles everything they've made, and it's just not true.
Go make more money, because I always say I'd much rather have 60% of 50 million than 90% of 50,000 any day of the week. And so it's earning the extra $10 is not going to make your tax bill skyrocket where you're losing money by earning more. I think that's one of the it's sort of like the inverse of the write-off makes it free, right? Mm-hmm. It's thinking that your tax bill is going to go way up because you're earning a little more. So I think those are three of the most common like tax myths around the tax code in the United States that come up a lot.
So we're talking to a lot of founders and a lot of CEOs that are trying to scale their organizations big and scale them fast. And I guess when we look at that, when you're scaling and really trying to grow something big, how do you stay aggressive, but also at the same time still stay compliant? Because, if you miss a compliance issue, you're, in a big amount of trouble, but at the same time, you want to scale your business quickly. So I guess what things should we be looking at?
I think for me, that's just making sure that you're leaning on professionals to help make sure it gets done correctly for you. And whether that's in the tax side of things or the marketing side or whatever that might be, I work with a lot of business owners and founders, especially as well. And in my experience, most of them are really, really good at the thing they do. And then they have an entrepreneurial seizure and start a business, and they go do that thing really, really well. And that's what makes them successful. But they didn't go to school for accounting or getting booked on podcasts or running Facebook ads or whatever that might be. And so in my experience, it's always been pay the people who have done that 1,000 times, and they know you think you're unique, but you're not. You look like every other business owner that's at your size. And so you want to hire the people that have seen your problem 1,000 times, and they can tell you exactly how to address it. And that's how I live. I can do the tax side of things and the accounting side of things. I do that for myself in the other areas of my business, and that served me well. And I think that our best clients that stay compliant, even as they scale, do exactly that. They get us the information that we're requesting timely so that we can make sure that their books are up to date, their tax plan's actually getting done. They answer the calls of our admin team members that are trying to get their tax planning meetings on the calendar. And so being responsive and being willing to lean on the professional who knows what they're talking about in that particular arena, and not coming at it with humility rather than thinking everything, is to me a way to stay compliant as you scale. And then just specifically as it relates to staying compliant on taxes as you scale, making sure that you are getting every business owner says they want a proactive CPA to help them save taxes. But in order to do that, you've got to be proactive yourself when it comes to getting the information to help them succeed. And so I think it's setting up a set of books from the very beginning rather than using a spreadsheet or managing your business by your bank account. It's filing timely. Actually, a few years ago, I was at an event with a friend and mentor of mine, Andy Frisella, who is a small company called First Form. It's actually a very big company for those of you who don't know who he is. Someone was asking in the event, it was during the Q&A section, they were actually asking about taxes. And Andy doesn't do taxes, but he gave an answer that I thought it's one that I've referenced back several years later, multiple times. And he said, the best advice I can give around taxes is to pay them. Mm-hmm. And so many business owners are focused on just getting that next dollar or making payroll or figuring out where they can get their next client or whatever that looks like, that suddenly 3 or 4 years go by and they haven't filed and they haven't done their books, and all they're doing is logging into their bank account every morning and seeing if there's money in there. And if there is, they spend it. And if there's not, they don't, rather than actually running their business by financial metrics. And when that 3 or 4 years goes by, and then it's this looming thing in the back of your mind, it becomes a bigger and bigger and a scarier and scarier problem every year. And so if you're someone who's listening to this and you just got started, don't let that become a 3 or 4 year hairy problem, because I've seen it happen where it becomes a 10-year problem overnight, and then it just becomes impossible to address. And if you are that 3 or 4 year person, you are not alone, and it happens way more often than you think. Mm-hmm. And so the best thing you can do is just swallow that and just get it done, put it behind you. You can set up payment plans and get that done, and pay up to over 6 years at a reasonable interest rate, rather than just having that mental just thing hanging out in the back of your head. And so that's something that doesn't help you save taxes. It doesn't, but it does eat into mental space if you don't take care of it. And so I think that's something that is more common than you'd probably realize. And so if you're listening to this, just get it done.
So let me ask you this. I'm a big systems guy. And I guess when we're looking at, obviously we should have professionals helping us and whatever it might be, but what systems should we have set up in our business so that we can work with somebody in the right way and can position ourselves to, I guess, really have the best tax structure?
Yeah, I think it starts from doing your books. And that doesn't mean, like I said, having a spreadsheet where you kind of plug some numbers in once a year when it comes to tax time.
Do you have one bookkeeping system you like more than others?
QuickBooks is probably 99% of our clients that they use. It's so easy, it's cheap. And in terms of actually setting up a system, I would say don't be your own accountant. It's so easy to find a cheap bookkeeper, an inexpensive bookkeeper to just do it for you, so you don't have to spend your weekends away from your family doing your books, because you probably don't like to do it anyways. And at the same time, I'm a realist, and I understand that conserving cash is also important in those early years. So if you are going to rely on yourself to do it, just take a weekend, set up QuickBooks, and then connect all of your bank accounts, and just have a routine where every morning when you pour yourself a cup of coffee, you can literally do it on your phone and just click accept, approve every single transaction. If you do it every day, it's 3 or 4 a day, and you just start doing that habit. Number one, your books are going to actually be up to date and reasonably accurate if you're doing that every day. And then number two, as my friend and partner Tony Robbins says, where focus goes, energy flows. And so if you're in your books staring at your numbers every single day, they're going to improve. And so that's the foundation of everything in terms of the financial and tax aspect of your business. And so doing that one thing will make a huge difference in terms of your ability to have a pulse on, because you'll start to see the flow of your cash and start to see where your expenses and your money is actually going. And then you'll import this one subscription that you signed up 18 months ago and you never got around to canceling it. And you're like, wait, I don't remember the last time I've logged into that. Let me go cancel it. And so you stop leaking money. And then when you do find a tax advisor that can help you tax plan, you're going to have accurate numbers to work from. Because I can't tell you how many times I've gone and done, this was early in my career, I would just ask the client and say, hey, what's your income? And they assumed revenue equals profit, which doesn't always be, that's not always the case. It's never the case. But they would say their revenue as the income. So we'd plug that in, right? And then it turned out they had $60,000 of expenses from a credit card they forgot to mention. And their income was actually a lot lower than they said it was. And so then we gave them all these tax strategies that they should do on incorrect numbers. And so you want to have an accurate set of books. So that's the foundation of everything.
Mm-hmm.
And not near enough business owners actually make decisions from their numbers and actual metrics. And so if you just get in the habit of doing that, it's so easy. It's gonna give you a lot more peace of mind around the other areas of, kind of leaning into risk and growth in your business too.
I'm curious, what do people waste the most money on? You've helped a lot of people with kind of making those things go right and, handling their tax burden, but what do they waste the most money on?
Yeah. I think it depends on the business.
Mm-hmm.
But I would say, I think they tend to waste the most money on, and entrepreneurs tend to be risk driven people, and they tend to bet on themselves by nature, right? And so they spend a lot of money on investing in the skills they're already good at,
Mm-hmm.
rather than the areas that they actually need to shore up in their business.
Mm-hmm.
And I see that in the personal development space where I'm meeting with people at, a conference, because we do a lot of conferences and everything that we do. And they can't find a way to find $6,000 to invest on a tax plan that we literally are showing that it's going to save them $100,000 in taxes, but they just dropped 50 grand on a mastermind about sales when they are already crushing sales. So I think that it's the, and I do this myself because I love
that could be hard
marketing
too, because you can also be a bit of a junkie on it as well. Like if I just get like that 1%
yeah,
better,
that one
man,
extra thing. Yeah. And it is true. Once you reach a certain level in your business, the little nuggets make a huge difference. But if you're focused on growing sales and everything else is falling out the back end, let's not spend another $20,000 on sales education. Let's focus on, going and improving the quality of your leads first, or you're spending all of this money every month on unnecessary expenses. Let's maybe look at a financial plan and getting that in place. So I think that's something I've seen a lot. And of course, that's more in the clients we get from the personal development space, more than just like your typical, construction worker and things like that. But yeah, that's something I see a lot of.
Looking at you as a founder, you've scaled past $5 million multiple times. What's been the biggest things you focused on, and what's been kind of the biggest things that you've really made work to make that happen?
Yeah, I think for me, the number one thing that I've always focused on, and I think this is true no matter what business you're in, I just happen to offer tax services, is I've always been a huge advocate of placing the culture as number one, and a culture that is designed, not just happened upon. And if you're not intentional about it, it just will suddenly, you'll wake up and you'll have this company that you don't recognize overnight. I think Tony Hsieh talked about it, it was he did write about it in his book, but it was Guy Kawasaki in Apple, the bozo explosion. You don't want a bozo explosion where suddenly you've got a bunch of employees that don't fit the culture and you don't like the company you built. And so I've always been a big believer that if you get the right people on the bus, get them in the right seats, take great care of them, then they'll take great care of the clients because they're happy to be there, and the dollars and cents will take care of themselves. And that's been proven to be true. And every year as a CEO, every year I've been eligible to make the best firms to work for list. I've made it. Like my firm has made it. We've been number one small employer to work for, which is under 50 employees, by America's Best Workplaces for the last 2 years running. And so that has been, now that we have had that going from the very beginning, we're attracting great people where literally we have candidates in our pipeline. And this is in a space, by the way, tax accountants are not easy to come by. And I know every industry, finding great talent is one of the hardest things, especially if you're in a service business, to attract, and it's really your only competitive advantage. But we have consistently top talent who will have offers in hand, and they will ask the other companies to delay the deadline they have to make a decision by so that they can wait and have a final round with us to see if we might give them an offer.
Mm.
And so, and we literally have people that are, when we have our chats internally, our IMs, And we have a virtual water cooler channel where people just share whatever personal stuff. People will be on vacation and they'll come in into our virtual water cooler chat and they'll share pictures of themselves on vacation while they're on the trip. Like come
Wow.
back. So when I saw that starting to happen, I was like, wow, we got something special here. And that shows up in the interview process, and it's been a lot, and it becomes a flywheel where suddenly we have great people, and so now we're attracting even more great people, and then that translates into the clients love the people that we get to work with. They're blown away by them, and so that's been something that I feel like has served me well, especially in a industry where it's notoriously a war for talent.
Mhm.
And I've also invested in recruiting more heavily sooner than most of I'm aware of my competitors. We brought on a full-time recruiter when we had less than 20 people as total headcount.
Wow.
And I don't know that many companies that would invest a full-time recruiter in, as more than 5% of their total headcount, right? And so, but when we did that, it was a game changer for our business in terms of being able to be more selective, the volume of candidates we were able to bring in, and it's just been a game changer for us. So that's, I think, something that when I look at like the one thing over the years, that's probably the biggest. And then second would be I went heavy on personal brand pretty early in my career. And it was a whole lot easier to grow on social media back in 2017 when I really started taking it seriously than it is now.
Ain't
So
that true, man?
I'm glad I did that when I did. But it's always a game that's always evolving. And so that's something that has come with me and has allowed me. I think that was something that opened a door to my becoming partners with Tony Robbins. And so those are, I think, two things. It's kind of the culture and the brand are two things that have served me well over the years.
I want to go back to the culture though, because I think that is really vital to a lot of businesses. And I know you're a meeting starts on time guy, which I think is really important. I'm curious, what other things on your company culture are kind of big things you focus on to really build that? Because I think at the same time, meetings start on time, that changes the group mindset. It changes how people operate. It changes how they treat customers. But for you, what are the things you're looking at in culture?
Yeah, I think a few of the things that because we do start, stop, continues every quarter, which is where we send out a feedback form to all of our team members. And number one, on a scale of 1 to 10, how is it working here? And then what are some things we're not doing we should start? What are some things that we're doing you don't like that we should stop? And what are some things that you love about what we do that we should make sure we continue? We get all that feedback. I'd say 3 things that consistently show up on the continues are the daily huddle, our team events, and core value shout outs that make a huge difference in our culture. And we're a remote first culture. And so building culture in remote, kind of the fact that we've got a culture that people are absolutely like feel proud to be a part of, and everyone's working around the country and around the world, I think you got to be more intentional about it. But for those who maybe have a belief that you can't build a culture in a remote world, that's not true. So the first one on that comes up the very most is the daily huddle. And that's been in a few different books, but just kind of what we do with it is it starts, you mentioned the meeting on time. So it starts at 11:32 a.m. Eastern time, and it's 32 so that it does start right on time, not at 11:30 and then it drifts into 33 or 34.
That is very specific, by the way.
Yeah, and everyone's there right on time. And so everyone goes around, and this is with, we've got 27 people on the team now. So everyone's on the huddle, and everyone goes around and shares a personal or professional win. And so it's literally just, we spend about 5 or 10 minutes just people sharing a little connection piece. And then everyone goes around and shares their top priority for the day. And then we open it up for stucks. And if you're stuck on anything and need help, and we don't solve that, where 2 people are solving a problem while 25 others are staring at them. What we do is, I need help on this. Someone else says, I can help you with that. And then they solve it after the meeting. And then we finish the huddle with a core value shout. So whoever's leading the huddle, which we rotate that every week. I never lead the huddle anymore. Like I only lead the weekly goals update meeting. But then we finish the huddle with a cheer of our core values, and it's kind of cheesy, but everyone knows the values. And then And then, so speaking of core values, so we have all of our core values that are very defined. And then within that, what we do is within our internal chats, we have a core value shout outs channel where everyone can, if they see another team member living out one of those core values, then they acknowledge the team member, the value that they're living out, and then a brief 1 or 2 sentence summary of what that value is. And then those are coming through literally like every day of the week, pretty much. And then when we do our weekly all hands goals update meeting, we have a core value shout section where we put all of the people that shouted out that week and the recipients of the shout outs onto a wheel. We spin it, and then whoever gets selected, we buy them lunch for the week. So the firm buys them lunch. We send a DoorDash $25 to the person who did the shout out and to the person who received it. And it's just a way to encourage a culture of celebration and peer-to-peer recognition so that it's not always coming from me. Everyone sees everyone else living. And then you kind of see the people that are consistently getting the shout outs. Okay, we're identifying some, as the company grows, when you're running it, it's hard to know who's doing well, who's not, when you're not directly managing everyone. And now suddenly I'm managing the managers who are managing other managers who are managing people. So the core value shouts channel allows me to have visibility even down to the very staff level of who's really making outsized contributions. And so that's the second one. And then we do core value awards when we do our team events every year. And that's the third one is our team events. And so in a fully remote, we're a little bit hybrid now because we have a marketing and sales headquarters in person, but twice a year we pick a city and we fly the whole team to it. And it's basically a 3-day event where we fly in, we have dinner on Sunday night, and then we do a day of learning. So we do a workshop where we pick a focus. Like last year, we went to Disney World, and we spent our workshop time talking about how we Disneyfy our CPA firm.
Oh, wow.
And then we'll pick a time. We brought in a sales expert and taught everyone sales because it's an essential skill. No matter what role you're in, you can benefit from learning sales and communication skills. And so we do a day of learning, and then we do a day of fun where we just do some activities, and people look forward to these so much. And we usually get some new swag for them, and we greet them with some swag when they come out. And so that's another thing that people just rave about in terms of part of our culture. So those are a few pieces that contribute to that have nothing to do with like of course there's like accountability and metrics and having all of that where they've got to meet certain metrics to hit bonus eligibility and all that good stuff. But those are a few kind of, I'd say, unique things that contribute to our culture.
Very cool. Well, I appreciate you hanging out with me today, Tyler. For people that want to learn more about what you're doing or connect with you, how would be the best way for them to do that?
Yeah, I'm very active on social media. So it's Tyler McBroom on Instagram and YouTube, Tyler McBroom CPA on TikTok and X, and putting out daily free tax tips and business tips about culture and all that good stuff there. So give me a follow, shoot me a DM and say hello. And then if you're interested in actually learning about tax planning, you can go to trmtaxreview.com and schedule a free tax review and see what you might be leaving on the table in taxes, and see what you can save. So those are some good spots.
Very cool. Well, thanks for hanging out with us today, everybody. Reminder to like this video, leave us a comment, and smash the subscribe button, and we will catch you next time.